Yeah, during the first quarter of 2013, Bend, Oregon, and the Central Oregon region as a whole really experienced a rebound, I would say. It still remains a bifurcated market, meaning that there's some good news out in the marketplace and then some bad news. So we're not fully out of the woods yet, but it's been really encouraging to see investment activity pick up, to see the industrial market improve, to see the multifamily market, which is another property market which is very hot, I would say. Some new construction actually happening in the multifamily market, and just overall a better sense. I mean, I think we're seeing this nationwide, that there's a better sense of confidence out there in the marketplace, and then people are making decisions. People are spending money, people are in growth mode again. We're not just seeing one tenant move from one building to another. We're seeing some new companies come into town. We're seeing a great startup vibe in Bend, Oregon. There's a lot of small companies, a lot of entrepreneurs looking to grow. So I think that'll bear fruit in time. And then also I think there's more. We're leading into more larger deals where we've been focused on a lot of small deals. I think the deal size is increasing slowly but steadily. Now, the office market remains, it's struggling. It remains at about a 20% vacancy rate. A lot of the deals are smaller deals in the office market that we're seeing. Somewhere between like 1,500 and 2,500 square feet is the most popular deal size. We're seeing a lot of deals actually even smaller than that. The executive office spaces are filling up, and so those are all good things. Those are sort of green shoots, as people would say. And yet we still have a 20% vacancy rate, and we have certain pockets that are outperforming. For example, downtown has a lower vacancy rate than the overall market average. So that's encouraging. We're seeing people do more with less space. Companies are doing more with less space. Technology has absolutely changed the way that companies are utilizing office space. And the recession really drove that, and then an advancement of technology. We definitely have more people working from home, working remotely, and yet there's still this sense of space and culture that you can only achieve by showing up for work. So it's interesting. There's some nice new designs and floor plans, and the architecture delivering some new space. We've seen a great example of that downtown in the 1,000 Wall building, which was a complete remodel of an office building downtown Bend. We're seeing that at Franklin Crossing, where we're seeing people using more open floor plans like G5 and some of the designs that they have there. So rents remain low, and they haven't quite picked up yet. Your average rent in Bend, Oregon for Class A office space is somewhere in the $1.10 per square foot per month, triple net to $1.25. And we were hoping that market was going to be increasing already, and we're just starting to see the first signs of rental rate growth. We expect that to continue slowly and steadily over the next 12 months. The Bend, Oregon retail market continues to perform quite well, despite some of the challenges that retailers nationwide are facing due to competition from the internet. The downtown retail market is doing really well. We have a 3% vacancy in downtown Bend, and rental rates are increasing in downtown. The Old Mill, we've seen a lot of turnover in the Old Mill, which is the other major hub of retail activity in Bend. We've lost a couple of tenants, of course, over the last several years, and we've replaced several of them with companies like Naked Winery and Nichelle and Gymboree. A lot of these companies are taking a little bit less space, and again, that's another trend that we're seeing similar to the office market. We're seeing retailers do more with less. And I just returned from the ICSC National Convention, which is a global retail convention in Las Vegas, and there was a lot of good activity and a lot of good buzz. Definitely a return to growth mentality and optimism about the future. The Bend industrial market is like multifamily, probably the second strongest submarket that we're experiencing. I think it's being driven by the smaller companies that are coming back out of their garages, coming back to life, probably driven mostly thanks to the residential real estate marketplace recovering, and in fact in some sectors, really being quite hot, surprisingly. It bounced back fast. So we're experiencing not only rental rate growth in the industrial submarket of Bend, but we're also experiencing more sales. There's more sales activity, more investment activity, and the prices have really bounced just recently from, say, that $40 to $50 per square foot range, which was significantly below replacement value, to somewhere in the 60 to 80 range, depending on the product type, location, and quality. Yeah, if you're an investor looking to make an acquisition in Bend, Oregon, the important thing to know is that it's a bifurcated market. There's good deals out there still. Some remaining REOs are still on the marketplace. There's still some great values, and yet there's things that might be getting ahead of themselves a little bit in terms of pricing. So really do your homework. Understand what you're buying. Understand the fundamentals of the market and what the in-place income versus projected pro forma income. Work with a great advisor, and I'm sure you'll end up with a quality investment here in Central Oregon, because there's a lot of great things for the future, including Oregon State University, population growth rebounding. It's a great place to be. It's a great place for business, and I think it's a great place to make wise investments.